Financial nightmare for auto loan-backed securities and looming Florida condo Armageddon. Today, I read an article on Yahoo Finance put out by Barron's and written by Amy Stone titled, "The U.S. Consumer is Starting to Crack. Why Income Investors Should Worry." The author referenced Shannon Secosia, the Chief Investment Officer at NB Private Wealth, who said, "We're definitely starting to see additional pockets of stress as the savings cushion people built up during the pandemic is depleted." The author went on to say, this could spell trouble for the many diversified bond funds that own securitized debt backed by payments owed by consumer debt, such as credit cards, auto loans, student loans, and home mortgages. Here are my thoughts. It's not just that people have depleted their savings cushions that they built up from the pandemic. Inflation is crushing everyday Americans left and right. Just about everything in life is more expensive, and wages have not kept pace. Now, I think what the author said about bond funds has some merit. I am concerned that securitized debt could be in trouble. Do you remember how mortgage-backed securities contributed to the financial crisis back in 2008? Many of you probably did not know that many auto loans have been packaged into bonds in recent years. Some investors have been making a decent return from these bonds. For example, the author said at the end of 2022, a subprime auto loan rated BB would yield about 8 percentage points more than a comparable treasury, or around 12%. This is just me, but I have zero interest in owning anything like this. I'll explain why. Think for a moment about all of the people who went out and overpaid for vehicles in the past few years when interest rates were low and they had stimulus money. Think about all of the people who paid thousands or tens of thousands of dollars over MSRP because they got caught up in the fear of missing out and they just had to have a new car. Then think about all of the people who also overpaid for used vehicles. Many of these consumers have a mountain of negative equity in their vehicles. Some probably have buyer's remorse and realize they overpaid. The new car smell is gone, but the very expensive monthly payment remains. As some Americans struggle to pay all of their bills because of inflation, some may decide to stop making their vehicle payment and avoid the repo man for as long as possible. There may be others who find themselves unemployed as companies lay off human capital. The unemployment check may not be enough to cover the expensive car payment. We keep hearing about a commercial real estate crisis that is brewing. It is slowly starting to unfold. Just this past week, Fort Worth's tallest building sold for just $12.3 million at an auction, just 3 years after it was sold for $137.5 million. I have no doubt we could start hearing about more fire sales like this in the future. Think about how much junk paper is floating around out there because of auto loans. A lot of people owe far more than these vehicles are worth. If massive numbers of these vehicles end up getting repossessed, the losses could be staggering. It couldn't come at a worst possible time, as many manufacturers are having a difficult time selling their vehicles. Tesla is renting out airport and mall parking lots to store their vehicles that haven't been sold. Tesla isn't alone. Back in March, I read that Stellantis had enough inventory to last at least 152 days. That's almost 5 months of inventory. For those of you who don't know, Stellantis is the parent company for Chrysler, Dodge, Jeep, and Ram. I'm sure you have a neighbor or friend or coworker who overpaid for a vehicle. Not only were these people in a negative equity position the day they drove off the dealership lot, they are now in an even worse negative equity position because the market has softened so much and because of manufacturer price cuts. Reflect on how Tesla price cuts impacted the value of vehicles bought by consumers previously. I really have to wonder if we are going to see a wave of vehicle repossessions at some point in the future. which could result in trouble for those who own bonds packaged with auto loans. There are a lot of Americans who own vehicles, many of which are financed, and a lot of these Americans are upside down and financially struggling right now to make these expensive car payments. Depending on what happens with our economy, this could get very interesting. I read another article today. This one was on mishtalk.com, titled, "Florida Condo Owners Dump Units Over Six-Figure Special Assessments." According to the author, South Florida listings have doubled in the past year to over 18,000. Few of those units will sell, and those that do will be at a huge haircut. This article referenced a person named Ivan Rodriguez, who liquidated his 401k to buy a condo for $190,000. He then faced a $134,000 special assessment. He eventually sold the condo for only $110,000. Well, my friends, I hate to hear about this. My heart goes out to this man who made a terrible investment. I am sure he is really upset he pulled this money out of his 401k, especially with all of the recent gains. Now, some of you might say, this is an extreme example. Well, we may hear more stories just like this in the future. This is all because of what is happening in Florida after the collapse of a Surfside building on June 24, 2021, that killed 98 people. Many condo associations need to comply with the new structural safety law, and they need to have adequate cash reserves for the association. In order to do this, special assessments often need to be paid by condo owners. I really feel bad for retired people on a fixed income who thought they had their personal finances in order. Many probably never dreamed they would be on the hook for thousands, tens of thousands, or even $100,000 or more. These special assessments are probably shaking some people to their core in Florida. On top of that, many of these people are paying more for insurance, if they can even find an insurance carrier, since some companies have pulled out of Florida altogether. I'm really glad I don't own an older high-rise condo anywhere near the coast in Florida. If you dig into the law that was passed in Florida, it applies to buildings 3 stories in height or higher. All condominium and cooperative buildings within 3 miles of the coastline must complete inspections by December 31st of the year in which the building reaches 25 years of age, and then every 10 years thereafter. There are going to be a lot of condo buildings in Florida that will need to be inspected before December 31st, 2024 this year. Once they are inspected, imagine the shock that some homeowners are going to get when they find out how much money they may be on the hook for. With how much materials and labor cost these days, it could be very expensive. I suspect we will be reading some crazy stories in the news in early 2025. I have to wonder how many people won't be able to afford to pay these assessments. Some will try to sell their condos, but who will want to buy them if the new owner is going to be on the hook for some expensive special assessment? I am sure some people will just foreclose. What do you think about all this? Share your thoughts in the comment section below. Please keep in mind that everything in this video is for entertainment purposes only, and nothing in this video is financial advice or advice of any kind. If you need advice, seek advice from a qualified professional in good standing who puts your interests first and foremost. If you enjoyed this video, consider subscribing to the channel. Please also consider sharing this video with your friends. I want to extend a special thanks to everyone who has subscribed to this channel. I want to also thank all of my channel members. If you would like to become a channel member, there is a link in the description beneath this video. You can read more about the different membership levels. Please also check out some of the great books that I suggest you consider reading in the description below. I've included Amazon affiliate links to these books. As an Amazon associate, I earn from qualifying purchases. Stay healthy and wealthy. I'll see everyone in the next video.